And then off we go. Welcome to this next edition of our EAA IASB Financial Reporting Standards Workshop. This time we're going to talk about management commentary. Again, as you know, the session will be recorded. Any information that you would like to share on this project, maybe from your own research, anything that you'd like to bring to the IASB's attention, please feel free to post this into the chat or email Anna Simpson at ifrs.org directly. I would post her email into the chat in a second. So the IASB and Anna Simpson especially are very grateful for any contributions from you academics on this project. So please feel free to send those. Again, the purpose of this session, as with most of these other workshops in the past that we had, is to provide an overview of one of the IASB's current projects. And today we're talking about the Management Commentary Exposure Draft. And we're also going to hear about the EFRAG Secretariat's initial observations on this topic. But mainly, of course, we're interested in your contribution. So please feel free to ask questions, give us feedback on the proposals, and let's discuss related academic evidence. In order to briefly introduce the participants, let me first mention, unfortunately, Antarka, the IASB board member who was going to be with us today, had to call in sick today. So we will be running this with a very numerous and able team of IASB staff members. Those include Julia Fegina, the IASB technical staff and project lead of management commentary, Jelena Vojlo, also in the IASB's technical staff, and Matt Chapman, also IASB technical staff. The EFRAG's views and statements will be provided by Vincent Papa, Associate Director of EFRAG, also with us here today. And then, as always, we also have an academic contributor and commentator, an expert from the respective area who oversees and will bring into the discussion the academic literature related to the topic. And today we have Peter Kajueter. Peter is a dear colleague of mine from Germany, professor of international accounting at the University of Münster in Germany. He's also a member of the European Accounting Association's stakeholder reporting group, and also, which is relevant here today especially, he's a former chairman of the Accounting Standard Committee of Germany's working group on German Accounting Standard 20 management reporting, which we could probably say is a model of sorts for at least the first version of the management commentary practice statement. In terms of a format, the IASB staff will provide overviews of the IASB's proposals on management commentary. We're going to do this in 3 sections. And in each of those sections, we'll start with the IASB's overview. Then we're going to have Vincent's initial observations from EFRAG's perspective, followed from Peter's academic observations. And after each of these blocks, we're going to have a set of polling questions that you will be asked to respond to. And we'll also have time for your questions, which I would like to ask you in the chat. If you would like to provide other input in the chat, please preface that by chat only, so I don't accidentally call upon you. If you would like to ask a question, just ask it in the chat without that preface, chat only, and then I will select you and call upon you, ask you to unmute yourself to provide your question to the participants here. Good, and then we'll move on to the respective next section. We have about 2 hours, and experience tells us that we typically also need those 2 hours. Good. So without further ado, I would like to hand over to Julia Fegina, who will start introducing the IASB's proposals from a general perspective. Julia, please.
Thorsten, I think I'm going to jump in and cover this section in Anne's absence, so you'll have to make do with me.
Absolutely.
Right, and thank you, Thorsten, for hosting us on what promises to be a really interesting discussion for us, and we're looking forward to getting some really good and honest feedback on where our proposals land. So without further ado, let's jump to slide 2. And in this session, we're going to start by introducing the project. Then Julia will talk a bit about our objectives-based approach. Yelena will talk in a separate segment about selecting and presenting information, and then it's back to me for a segment on reporting on sustainability matters. And I think we have time for a Q&A at the end, don't we, Thorsten? So let's move on to, let's go straight in slide 4. And let me start with the basics. So apologies if some in the audience know all this, but it's a broad area, so it's good to start with the right foundation. So what is management commentary? Well, it's a report that complements a company's financial statements, so it's typically provided alongside them in a company's annual report. In the UK, it's known as a strategic report. In Germany, it's a management report, and in many other parts of the world, it's an MD&A. So it's the narrative discussion that provides additional information needed to interpret the financial statements to assess the company's prospects and management stewardship. It will include a mix of financial and non-financial analysis on matters that are key to the company's long-term success. So how does that compare with other forms of reporting? Well, firstly, although the matters covered in a management commentary will typically be of interest to a range of groups, for example, investors, employees, and the general public, management commentary focuses on investor and creditor needs. Other forms of reporting may address different users' needs. Sustainability reporting is, of course, one of the best known fields of wider corporate reporting. Many companies may be affected by sustainability factors. Where that's the case, management commentary would need to include material information on those matters, and we'll, as I mentioned, more on that later. So let's go to slide 5 now, and we'll look at why the board took this project on. So it had produced a management commentary practice statement back in 2010, but a lot has happened since then. Firstly, narrative reporting has moved on since 2010. Other frameworks have built on the original practice statement. Integrated reporting and national frameworks have developed ideas such as value creation and placed much greater emphasis on providing information about a company's resources and relationships that can play such a significant role in determining the company's success. So there's an opportunity now to consolidate innovations from these frameworks to support high quality, globally consistent narrative reporting. Secondly, though, we know that information needs are changing. There's much greater recognition of the importance of long-term prospects in determining a company's enterprise value. Of course, sustainability or ESG factors, as well as intangibles, are important components in that. Thirdly, there are some well-documented gaps in current reporting practice. And throughout our project, we've heard concerns which I'll very broadly summarise as a short-term view, so reports that don't address the drivers of long-term prospects, lack of focus, so reports that touch on the right topics, but then frustratingly don't provide useful information on them, and also fragmented discussion that tells just one part of the story, often focusing on the good news. So taking those factors together, an overhaul of the board's management commentary framework was needed to provide a robust basis for meeting global capital markets needs. Let's jump to slide 6 now, please. So what are we aiming to achieve with these proposals? Well, the aim is to provide a comprehensive framework that focuses on investors' information needs. It's intended to be an effective basis for companies to tell their story, bringing together in one report financial, sustainability, and other information. That story should be centered on the key matters that are fundamental to the company's future prospects. And information in a management commentary should be derived from the same sources that management uses to run the business. The board aims to issue a set of comprehensive and well-structured requirements designed to provide an effective basis for regulators to mandate the framework in their jurisdictions. It's also designed to provide an effective basis for auditors to provide external assurance, which could lead to greater trust placed on information in management commentaries. So we'll jump now to slide 7, please. And on the last slide, I explained the practice statement is designed so it can be mandated and enforced by regulators. Let me elaborate a bit. Companies do not have to prepare a management commentary in order to claim compliance with IFRS financial reporting standards. It's down to each company's regulator to decide whether they would like to mandate this framework. Because these proposals build on national innovations in reporting frameworks and aim to consolidate best practice developments, it should, we hope, be attractive for them to do so. And we'll talk a bit more about this later in the session. Companies can also choose to apply the practice statement. They might do so, for example, where they're faced with very broadly specified reporting obligations. For example, a requirement to describe the company's business model or strategy without guidance on what exactly that description is meant to achieve. To claim compliance with the proposals, companies must comply with all the requirements in the practice statement. Qualified statements of compliance are also permitted. So now let's come back and look at how management commentary fits with other requirements. And I'll answer that question from 2 perspectives on slide 8. So on the left, we have the interaction with existing national law and regulations. These are often broadly specified. For example, a requirement for companies to provide information necessary for an understanding of the company's development, performance, and position. The proposals could help companies meet those requirements either as mandatory regulatory guidance or as a tool to support best practice reporting. As you've heard, these proposals are designed to meet the common needs of our global capital markets. National or regional public policy objectives might create additional reporting requirements. Often there'll be an overlap. So the board has recognised that management commentary should include this additional information so that one reporting package can meet both objectives. So, for example, a management commentary might need to include information about a company's water stress sites. That information could be supplemented with information on the company's global water consumption, for example, if that was necessary to meet a regulatory reporting requirement. Now on the right, we have the interaction with sustainability and other topic-focused frameworks. The proposals for management commentary were designed from the outset to enable preparers to use topic-focused frameworks to identify material information to include in a management commentary. Of course, that could include information specified by a possible future international sustainability standards board. For example, a management commentary might need to describe progress in managing the environmental impact of the company's activities. The board's proposals are designed to provide a robust basis for identifying whether this information would be required, and they also specify how the information should be included in management commentary. For example, to ensure that it's not misleading, say because divergent trends for polluting and non-polluting sites have been aggregated into one company-wide metric. The proposals don't, though, specify precisely what metrics would be required in the company's particular situation. A specialist sustainability reporting framework may help management to do that. So let's jump to slide 9 now. And earlier I said that the board had designed management commentary to bring all the information types together to tell the company's story. So let me explain a bit more. So of course, financial information plays an important role in understanding a company's prospects and understanding stewardship. But other information is also clearly very important. Sustainability related information may be needed to understand, for example, how the business is managing the environmental impacts that could leave it exposed to regulatory or customer or other actions. And other information may be needed to understand, for example, whether the business is progressing in its target market, whether it's managing its supply chain exposures or maintaining the relationships it needs to succeed. So a management commentary provides the home for material sustainability and other information that may have been prepared using another framework, whether sustainability or industry specific, such as mineral reserves. And a company can extend its management commentary to include other information the company is required to report to meet local law and regulations, because it can be helpful to present this information together. So after that brief introduction, let me hand back to the chairman for, I think, the next section.
Yes, thanks very much, Matt. Vincent, may I ask you to come in and outline EFRAG's initial considerations?
Sure, thanks, Thorsten. And thanks again also to the European Accounting Association for this opportunity for EFRAG, albeit EFRAG Secretariat observations being shared. I just know that the official EFRAG position is still under development and will be determined by the EFRAG Technical Expert Group. And it will be presented in a draft comment letter, which we expect to issue in July. The question of relevance for the European Union often arises as the practice statement is not endorsed due to its voluntary nature, and also because the EU has relatively robust requirements for the preparation of management commentary, or at least some jurisdictions do, in the context of the combination of the accounting directive and the country-specific requirements. Sorry, could I ask that you move to the next slide, please? And the next one. So I would note that EFRAG issues comment letters to practice statements, as it is the mandate of EFRAG to contribute to the development of IFRS requirements in addition to its role in endorsement. But besides the due process of contributing to IFRS requirements, the main reason EFRAG has paid attention to the revised practice statement is that there's a recognition of its potentially important role, specifically, as Matt noted, in bolstering best practice and consistent reporting across the globe. So there's the opportunity for cross-pollination of best practices that we took note of. And this opportunity of cross-pollination was also evident in a recent study by the Australian Accounting Standards Board, which reviewed the requirements across 9 countries, actually, including Germany and the UK. And these countries are deemed to have robust requirements. So the review was done compared to the proposed guidance, and it showed that there is an opportunity for enhanced reporting, even with countries that do have robust requirements. I would also note that EFRAG, alongside ESMA and various other European stakeholders, took part in a consultative group that gave input during the development of the practice statement proposals. Next slide, please. So on this slide, we briefly touch on the strengths that we deem to be associated with the management commentary practice statement. So one is really around the value creation story, as was pinpointed, and the opportunity to also contextualize financial statement information. The linkage and connectivity of information outside and within financial statements is really key. and also the potential to actually have a role in the IFRS sustainability standards. So there's been an ongoing momentum towards the development of sustainability standards, and there'll be an opportunity to create some linkage between financial reporting and these sustainability standards that will come to the fore. A point I would also note is that the proposals to allow both unqualified and qualified statements of compliance that Matt mentioned will likely encourage uptake of the management commentary practice statement relative to what is the case today in regards to the 2010 practice statement. Next slide, please. On this slide, there's some observations around areas that need to be further considered when you're thinking about the role of the practice statement. There's a question around the scope. So there are potential ambiguities in the scope of the management commentary practice statement, particularly around the so-called pre-financial information. There's a view that's been expressed by some stakeholders that the identification of matters that are financially material, or that's financial materiality, when you're considering enterprise value, is incomplete unless the organization has first identified its material impacts on sustainable development. So there are bound to be questions as to where the boundaries are drawn. There are also likely to be questions around the boundaries in a more general sense of management commentary information. While I would agree with the decision also not to be prescriptive when I read the guidance, so it was not prescriptive on time horizon, but consistent with the objective of reporting on long-term prospects, which Matt mentioned in his introduction, I would consider it helpful for the guidance to actually require entities to clarify what they mean by short, medium, and long term. So the IASB cannot define, but the entities themselves could define what is meant by those time horizons. As far as the objectives are concerned, so you did mention, Matt, the focus on investors and creditors, decision useful information, but there's also a question around the assessment of stewardship, which could be a key objective. There's a broad challenge also with the terminology that the management practice statement, at least the guidance that's being put forward, could pose. So there's a whole raft of new terms and different terminology being applied. So questions could arise, for example, as to whether key matters are different from materiality. The 6 capitals of the integrated reporting framework, how do those overlap with resources and relationships? You put emphasis on investors and creditors. But when we think of the other language of financial reporting, reference is made to primary users. So here there seems to be a more targeted focus on a subset of primary users, and questions may arise from that. The last point I'd mention is also around the enactment and the uptake. So at this point in time, when you consider the 2010 practice statement, there's limited uptake, but there's a question as to whether just having improvements in the guidance will enhance the uptake and what needs to be undertaken, so to speak, to increase the uptake. And a point I would make here is that a field of dreams approach where you really rely on the quality of the guidance is unlikely to be sufficient. And perhaps there are lessons that could be learned from the rollout of other voluntary guidance. The TCFD comes to mind, where there's been support, but this has really occurred backed by extensive outreach to policymakers and market actors. So a lot more needs to be done to ensure the uptake of the management commentary practice statement. I'll stop there.
Thank you very much, Vincent. This was an incredibly rich initial set of observations. I love the Field of Dreams reference, one of my favorite movies, by the way. Now let's hear from Peter about academic work related to management commentary and how it could inform this project. Peter, please.
Yes, thanks, Thorsten, for the opportunity to share some views from the perspective of an academic being involved in standard setting here in Germany. But I have to say it's also my personal views that I will share, and also not necessarily those of the Stakeholder Reporting Committee of the EAA, where we didn't have time yet to discuss this exposure draft. Now, I would like first to take a look back, and that perfectly fits to what Vincent just stopped with, saying, well, in 2010, we had this new type of pronouncement, a practice statement. It was described to be non-binding, and as the IASB perfectly says, probably this was a little bit misunderstanding, confusing, and still the argument at that time not to get in conflict with national pronouncements. I already was very skeptical about this 10 years ago when I saw that practice statement for the first time. Now, the idea then was to promote international harmonization and, of course, improving the quality of management reporting. Looking at the research that has developed in the last 10 years, I have to say there is very little research specifically dealing with the practice statement. Of course, we have a bunch of research on narrative reporting, and that has, well, extended in particular in the last few years. But I had a look in preparation to this meeting here, what are, well, specific papers dealing with the management commentary. And I found about 10 or 12 of them, and they are all published in rather low ranked journals. So that is also an indicator how we as an academic community dealt with the practice statement. And looking at, well, practice and at jurisdictions internationally around the globe, I think still, in light of this little evidence that we have, I would rather say it's a low adoption internationally. So, and that is probably agreeing to what Vincent just said. The uptake, right, was very low, and that should be something definitely considered, because management reporting regulation continues to be very fragmented. And the objectives that the IASB had to improve the quality of management reporting, if you look at the list that is in the basis for conclusions here, I mean, it's basically showing that there is still a need and that the shortcomings continue to exist or have even increased. So, against this background, I think the exposure draft is a good step forward. So congratulations for all the work that you have done. I personally know that it is a very tough work to develop a standard or any guidance that pleases everybody. And that is not only the case from a national perspective, but in particular, if you look at it from an international perspective, where you have lots of more variety in expectations. So I think it's well done that you consider the recent developments in narrative reporting, and in particular here, also non-financial reporting, integrated reporting, that there are more detailed requirements and guidance compared to the rather loose guidance that the initial practice statement provides. You define minimum requirements for the contents, and I think it's important that you are open for also additional local reporting requirements, as you said. And very important also that you consider assurance for management reports, because this is, I think, an area very much neglected, also in terms of research, but also looking at it internationally. There is no international standard for assurance for management reports. We do have one in Germany, a national one, and I will also share some experience later on with you in terms of assurance. Now, looking at this, what can we learn? I mean, still, next slide, please. Given that it is a good step forward, I would question the approach of remaining with the practice statement. As we just heard, a practice statement won't be endorsed in the EU. And so adoption, I think, will remain rather low. And just relying on spillover effects, I'm not quite sure. Also about this study that we've just heard about. I mean, from an academic perspective, you never know what is really the cause. Is it the practice statement that fosters innovation, or is it rather the integrated reporting initiative? So that is rather hard to say, or any other initiative that fosters innovation. I'm not sure whether this practice statement is suited for insurance and also for being enforced, in particular if it's basically not a legal document in the EU. And also very important, looking at the image. I mean, you nicely showed these two circles of financial reporting and wider corporate reporting, and the management commentary is part of financial reporting. So that means I think it should have, from the type of pronouncement, something that is equally relevant, and a practice statement might signal that this is rather less important. So what I would like to suggest is develop an IFRS standard, like, for example, IAS 32 on interim reporting, that is applicable only to those entities that are required by local law to prepare a management commentary. Complementing IFRS financial statements, or do so voluntarily. So IAS 34 is a good example. You can well, prepare IFRS financial statements without applying IAS 34, and so you could leave it up to the jurisdictions to adopt the standard. But a standard would be a much better basis for assurance, for enforcement, for well, signaling the importance of that topic. The standard could then also be endorsed by the EU. The EU could well, have a member state option to mandate or allow the member states to adopt the IFRS on management commentary, and maybe also define some additional requirements by the EU directives. So that will lead, for example, to sort of dual reporting according to the management commentary and national standards, for example, the German accounting standard number 20 on group management reporting. So far, I have to say, I know two German companies that make a reference to the current practice statements, that is SAP and Deutsche Börse. But apart from that, I think it hasn't had any significant influence in terms of adoption, and I think that would be a good step forward. Next slide, please. And some final additional observations. Is the reporting entity the same as for the related financial statements? I guess it is, but it's not made clear in the exposure draft that you have presented, and that certainly would help, in particular as the boundaries are somewhat blurred. Second, is it possible to prepare a sort of combined management commentary? So local laws, like here in Europe or in Germany, they allow to combine the management commentary of a parent company with the management commentary of a group. I don't find anything on this in the practice statement. And also here in Europe, we have interim management reports. So there's nothing about this in the practice statement. Maybe that would also help. So is compliance necessary, or is, in other words, the practice statement also applicable for interim management reports? And if so, do I have to comply with all the requirements? And finally, more formal suggestion, distinguish more clearly in your documents between the bold letters, and that should rather refer to requirements and the guidance, maybe in normal letters. I know it's just a formal one, but it probably helps to read the document. So I had some difficulties in distinguishing at a first glance what are the requirements and what are the additional guidance. So thank you.
Thank you very much, Peter. So generally happy, a lot of suggestions for improvement. Let me now lead over to our Q&A session. As you see on the slide, we're really interested in your take and in your comments and questions. So please use the chat to ask those, and I will be happy to call upon you to unmute yourself. In the meantime, however, as an empirical researcher, I'm always interested in your survey responses as well. So let's launch the first poll. So the IASB would be interested in your opinion on the following questions here that you should now be seeing here in your Zoom window. So in your view, what should management commentary do? Anything that applies to you should be selected. And then secondly, how would you like to see the revised practice statement used? Again, feel free to provide multiple answers here on these questions. So while this is coming in, people are now responding. While this is coming in, I'm eagerly monitoring the chat to see the first question from the audience popping up here. Maybe people are holding their powder dry for the detailed discussions in the upcoming sections. That would be fine as well, since time is short. So I would give a few more seconds for the polling replies coming in. Eye on the chat here. So 50 of 86 have now responded. It looks like for the first question on what the management commentary should do, we have a clear favorite, a clear winner here. Explain factors that affect current period financial performance and position, or could affect them in the future. That would be the main purpose. And then how should it be used? We have most people who say this is a benchmark for best practice reporting, not necessarily something where we need to have mandatory requirements in jurisdictions necessarily. So this might be the Friday afternoon or Friday morning or Friday night slot here that makes you a bit passive. Again, the IASB is really interested in your feedback. That's why we're inviting you to these sessions. Of course, they're also to some extent teaching sessions and education sessions for you, but reciprocity is important. So let us know what's on your minds about this. Good. Okay, so I will end the poll here. 62 responses, which is a great response rate for an empirical researcher, clearly. So let me now share them with all of you to see what people think. Again, the majority feels that this should be an explanatory statement about issues related to financial performance and position now and in the future. And also, most people do not advocate necessarily requirements for this practice statement. Good. Then I would like to initiate our second section This is going to be probably our most comprehensive one on the objectives-based approach of the management commentary practice statement. And I will now hand over to Julia. Julia, please let us hear about these proposals.
Thank you very much, Thorsten. Can you hear me well?
Yes.
Excellent. I just wanted to make one comment on the responses. It was very interesting to see responses to the foreign questions coming in. And what kept going through my mind, as Vincent mentioned, we had a dedicated management commentary consultative group on this project. And it was very interesting to hear their views as we were developing the proposals. And I suppose one of the messages we heard from that group loud and clear, that if the financial statements are about what has happened to the company, then management commentary should be about why it happened and what it means for the future. And I think the responses to the foreign questions, they sort of, convey a very similar flavor. So it's nice to know we're all on the same page broadly on that. So with that, I will turn over to my section. So Matt has already spoken about why the board is doing this project and what the board is trying to achieve. And now I will talk about how the board is looking to achieve that. If we go to the next slide, please. So as Matt has already mentioned, the main objective of this project is to develop a framework which is on one hand flexible enough to allow companies to tell their unique story, but on the other hand, that it is robust enough to enable enforcement and assurance of resulting management commentary. So this is a dual objective here. And to achieve this objective, the board is not proposing detailed list of prescriptive requirements that all companies must meet in all cases. Instead, the board is proposing a comprehensive set of disclosure objectives that comprise an objective for management commentary as a whole, supported by disclosure objectives for all areas of content in management commentary. And the areas of content, as you can see on the slide, include business model, strategy, resources and relationships, risks, external environment, and the company's financial performance and financial position. And now this comprehensive set of disclosure objectives is further supported by guidance on how information and management commentary should be selected and presented. In particular, the requirement to focus on key matters that Matt already mentioned, and also examples of material information. So let's look at all those building blocks one by one. If we can go to the next slide, please. So starting with the objective of management commentary as a whole, the board proposes that this objective should be twofold. On one hand, it should help investors and creditors better understand the company's financial performance and position that are already reported in the company's financial statement. So it's about enhancing that understanding. On the other hand, it should provide insight in what this means for the company's ability to create value and generate cash flows in the future, including in the long term. So the objective has a backward-looking perspective and a forward-looking perspective. And it's all about what has already affected the company, why it happened, and what it means for the future. And as Matt already talked about, management commentary is primarily focused at investors and creditors, at primary users of financial statements. And so to reflect that, the guidance that supports the objective of management commentary as a whole highlights that information needs to be provided if it is material to investors and creditors, if it helps them assess the company's prospects for future cash flows, and helps them assess management's stewardship. And this overall objective of management commentary is also aligned with the conceptual framework for financial reporting that equally applies to management commentary as it applies to IFRS financial statements. Now, if we move to disclosure objectives for the area of content, if we go to the next slide, please. So the disclosure objectives for each area of content comprise three components. Headline objective, which describes overall investor information needs for the area of content. Assessment objectives that describe the assessments that investors make and that need to rely on information for that area of content. And finally, specific disclosure objectives, which describe detailed and specific investor information needs in relation to this area of content. So all of those components of disclosure objectives are anchored in investor information needs. And these disclosure objectives for area of contents are the heart and the core of the document. It is the tool that the IASB is using to achieve the objective of, on one hand, helping companies to tell their unique stories, and on the other hand, to provide guidance that is enforceable and that would result in management commentaries that can be assured. In the interest of time, I could probably talk more about the overall design of disclosure objectives, but maybe in the interest of time, we move to the next slide and we can come back to it if there are questions. So before I go to some examples, I'd like to also talk about disclosure objectives for areas of content as a whole, as a package. And as illustrated on the slide, the disclosure objectives for areas of content is one coherent, integrated whole that is linked and anchored to the company's ability to create value and generate cash flows. So business model is about what the company does today and how the company creates value and generates cash flows today. Strategy is about where the company is heading and how management plans to develop that ability to create value and generate cash flows in the future. Resources and relationship is what business model and strategy both depend on, and again, it all links to that ability to create value and generate cash flows. Risks is about what can disrupt the direction of the company, what can disrupt the business model, the strategy, and the company's resources and relationships, which are important for the company's success. Now, external environment, it is that context in which the company operates and which affects everything. It affects the business model, affects the strategy, affects the resources and relationships, and the risks that the company is facing. And now, information about all those areas of content in its turn helps to understand the company's financial performance and position that is reported in the company's financial statements, and helps to understand that ability to create value and generate cash flows. And so the idea is that those disclosure objectives will provide that tool which will enable companies to include all material information, financial information, sustainability information, other information in that single report, so investors can get all the information they need in a single place. Now, to make it all a little bit more specific and a little bit maybe more understandable, let's go through some examples. And if we start on the next slide with disclosure objectives for business model as an example. So the headline objective for the business model states that information and management commentary should enable investors and creditors to understand how the company's business model creates value and generates cash flows. So that's very good in principle, but what exactly does it mean? How companies would apply it? Well, here the assessment objectives provide this supporting granularity. So the assessment objectives tells us that information about a company's business model should enable investors to understand and assess how effective the company's business model is in creating value and generating cash flows. So at a very basic level, how good the company is at translating and transforming the inputs into the outputs, value, and ultimately cash flows. Now, it is also important for investors to understand how scalable the business model is. Does it have potential for growth? And how adaptable it is to the changes in circumstances and conditions. And finally, investors and creditors need to be able to understand and assess how resilient and how durable the company's business model is likely to be, and is it going to be able to withstand stress. So you can see how the assessment objectives provide this additional granularity that supports the headline objective. But then we can go even one level further down and look at the specific objectives, which provide even more granularity. And specific objectives tell us that the company needs to discuss and help investors understand the range, nature, and scale of the company operations, It needs to explain the cycle for creating value and generating cash flows, so how those inputs are transformed ultimately into outputs and cash flows. The management commentary should enable investors to understand environmental and social impacts of the company's activities in those cases where those impacts in their turn can affect the company's ability to create value and generate cash flows. And finally, it is important that entities talked about the progress in managing the company's business model, including any applicable metrics. So this is a very comprehensive package to enable companies to tell the unique stories about business model. And to help them do it, we also have guidance on selecting and presenting information, including examples of information that could be material. And Yelena will talk about those examples later in this presentation. So if we go to the next slide, I'm not going to talk about every area of content in a lot of detail in the interest of time, but just to highlight some key points. So if we're looking at strategy, it's all about, well, how management is going to sustain and develop the ability to create value and generate cash flows. How effective management strategy is likely to be, and also is it likely to be achievable? Is management going to be able to implement the strategy? And to help investors to understand all this, the company needs to talk about drivers of strategy, it needs to talk about risks and opportunities, it needs to talk about any specific aims, milestones, and plans that form part of the management's strategy. It needs to talk about, well, does the company have the resources that are necessary to implement the strategy, and how the company is allocating its resources, in particular its financial resources. And finally, how good the management has been so far in implementing the strategy. If we go to the next slide. So resources and relationships, it's all about understanding dependencies and understanding what business model and strategy depend on. And in particular, it's about understanding the extent of those dependencies on particular resources and relationship, and also understanding the company's ability to maintain and obtain those relationships and resources that the company needs for its success. If we go to the next slide, please. Risks. It's all about understanding the extent of exposure to risk and about understanding how effectively management has been and is likely to be in managing those exposures to risks, including reporting progress in managing risks. Again, I'm not going to go through every aspect in detail, but just to give you an overall flavor. If we go to the next slide. External environment is about understanding what is affecting the company, what is affecting its business model, what's affecting its strategy, its resources and relationship, and its risks. And again, how good the management has been and is likely to be, how well management monitors and responds to those applicable trends and factors in the company's external environment. And finally, going on to the next slide. Financial performance and position is all about better understanding performance and position reported in the company's financial statements. It's about understanding what has driven the numbers reflected in the financial statements for the reporting period. How do those numbers compare to previous expectations, and why they are what they are, and also what it's likely to mean for the company's future development and for its future financial statements. So I think that probably completes my brief overview of the objectives-based approach. And I think with that, I will hand it over to Vincent to talk about EFRAG's initial reactions.
Thanks, Julia. So in this slide, I'm going to have some comments around the objectives-based disclosures. A point I would note is that an approach of specifying general and specific objectives of disclosures has been applied in other recent IFRS standards. So I have in mind the rate-regulated related exposure draft and the disclosure initiative exposure draft as well. And EFRAG has supported this approach of making this distinction. And in the context of the management commentary, a similar specification of objectives is appropriate. I would agree that prescriptive disclosures would not work for at least two reasons. As Julia mentioned, key matters are entity specific. But another point I would raise also is that key matters are dynamic. So there's been this notion of dynamic materiality, whereby topics may not be important at this point in time, but they'll be important further down the road. So I have in mind, for example, there's a lot of focus on climate-related disclosures currently, but further down the road, the focus may be on biodiversity. So if you've got a very prescriptive approach to disclosures, they likely become obsolete within a very short time. However, I would also note, unlike the other exposure drafts, where there's a focus on, I guess, general and specific disclosures, here we've got headline, assessment, and specific objectives. There could be some confusion around different labeling across different consultation documents. But at this stage, we are also struggling and have questions around the assessment objectives, that additional layer that you have. And whether there'll be need actually for entities to analyze how investors and analysts, creditors use or analyze the information. There are really two questions going around with that. Whether can such an assessment be meaningfully done by companies when you consider the diversity of types of investors? The second question is, should it be done actually by preparers? And wouldn't it suffice just to have specific objectives where you focus on matters that are key or material from the investor's point of view? And I guess there's a mechanism of determining what's material that should capture that. But do you need to go as far as, and maybe I've misunderstood what's meant, and I was listening very carefully with the examples that Julia was giving, and I guess we may need to digest it a bit more carefully. But there were really questions around that assessment objective. Then a final point I'd make on disclosures, I think both Peter and Julia mentioned the enforceability and auditability aspects. In that vein, IFRAG's response to the Disclosure Initiative pilot project raised the point that objective-based disclosure requirements are likely to be prone to creating applicability, enforceability, and auditability issues. So one recommendation we've made is the need for field testing wherever management commentary is being applied, just to test those particular aspects. Going to the next slide. So on the strengths, I would note that the guidance provides strengthening of overall relative to what we've got in the 2010 practice statement, the strengthening of guidance around the reporting of the business model and resources and relationships within which intangibles reporting is included. Various studies, including the ongoing work by the European lab at EFRAG, where there's been a focus on business model reporting and looking at the examples that are in place, has shown that there's inadequacy of business model reporting. So this guidance being provided by the practice statement is really timely. We'd also note that relative to the 2010 management commentary practice statement, resources and relationships and factors from external environment are a separate topic. So that shows increased emphasis on these particular aspects. Overall, I would say that the 6 areas of content have the potential to promote the overall reporting in narrative reporting. As Matt mentioned earlier on, the best practices and consistent reporting across jurisdictions. And here again, I'll refer to the Australian Accounting Standards Board study, which showed that, for example, 4 of the countries, so this study looked at 9 countries, it showed that 4 of those countries had no guidance on strategy. 5 countries had no or inadequate guidance on resources and relationships. And at least 1 country had no guidance on the other 4 content elements. So clearly there's potential here to, across the board, enhance practice insofar as these countries can integrate the management commentary practice statements within their respective guidance. Some initial reflections on what could be enhanced or further considered. When I read the specific guidance so far, my initial questions are whether the guidance for strategy and business model ought to be combined, as they seem to be inextricably intertwined. So that's a question I have in mind. Some stakeholders have also argued for a separate and explicit chapter focused on intangibles, rather than it being implicit and embedded within resources and relationships. governance is another aspect that some have argued could be focused on more explicitly and also in a separate sense as well. Because I guess you've even within your examples, you've pointed to environment and social examples, but there's less around governance. And when some analysis has been done, for example, trying to compare the non-financial reporting directive, which had some governance elements, versus the management commentary, some were perceiving that the governance aspect was not being addressed. So I guess some explicit focus on that could help, as well as examples around governance. The final point I'd make is that there's asymmetry in the treatment of risks and opportunities, and there should be equal prominence given to both risks and opportunities in the guidance. With that, I'll pass over to Peter.
Yeah, thanks, Vincent. And I share many of your comments, but maybe I can also add some additional views. And overall, I think that this objective-based approach is suited to find a balance between the entity-specific information, also providing flexibility, but at the same time having some standardization and greater comparability of management commentary across companies, also across jurisdictions. However, I would consider to have a greater emphasis on the principle of the management approach. This is something that you still have integrated in your exposure draft, but to my mind, it has a rather low prominence. It's rather mentioned as supplementary guidance or so. And I think that could even enhance the objectives-based approach in a way that you could, for example, define that a company has to provide quantitative metrics if it has it available internally. So combine objectives-based approach with the management approach to a greater extent. That's what I would, I think, suggest in order to enhance the quality of information, because we have a lot of research that shows that the management approach, for example, also in segment reporting, provides relevant information to investors. As I already said, that the objectives-based approach is really suited for external assurance, and I basically refer to what Vincent just said, check with the audit profession. I think this is very important because one of your ideas here is to have a pronouncement that could be subject also to audit. Then I feel that the concept of the objectives-based approach with the 3 layers, with the headline objectives, assessment objectives, and specific objectives. Well, I'm not a native speaker, but from my initial impression, these words seemed a little bit odd and making it complicated. So why not just sticking to 2 layers, overall objective and specific objective? Basically, I think similar to what Vincent just said, probably that's making it easier also for preparers to apply that approach, and more intuitive in terms of wording. Also, in terms of wording, you're talking about the company's ability to create value and generate cash flows. This is something that you mention all the time, the ability to create value and to generate cash flows. But you define the value creation basically from the investor's perspective, so by enterprise value. And what is enterprise value different than the discounting of future cash flow? So in a sense, I think it's sort of redundant, and you could simply stick to the ability to generate value. In terms of the content areas, I think that you cover all relevant all relevant areas that are relevant in management reporting. Although by looking at them, at the first glance, I missed the non-financial perspective. Right? If you look at all that, I mean, you said financial performance, financial position, and I know that this is probably linked to the financial statements. As you said, it should explain how the financial performance and financial position at the end of the day developed. But given the relevance of the non-financial performance and also what you have in mind by developing the sustainability standards, bear in mind that this shouldn't be more prominent in terms of the content elements. What I miss is the prospects, right? The prospects is something that you had in the initial 2010 management commentary. And I know, as you describe in your exposure draft, that basically forward-looking information is provided in various parts. So in terms of strategy, in terms of risks, but still a dedicated section for the prospects in the idea of complementing financial statements, basically providing a summary from management perspective would be, I think, very important in terms of complementing. I'm aware that some jurisdictions do have problems with that in terms of liability, etc. But from a European perspective, I mean, this is part of the EU directive to provide guidance on the future development. And what I would like to suggest is to make it a content area, but a voluntary one, but simply include it, right? Don't leave it aside. Now, I don't have time to comment on all content elements, and still, next slide, please. I feel that one of them is worth having a closer look at. Next slide, please. And that is the risk, right? Now, we know from research that risk reporting is a very tricky reporting requirement. And so companies have difficulties with that. And usually there is a poor quality of risk reporting. But still, looking now at your exposure draft, I first noticed that apparently you have now a different view on risk because comparing with the 2010, you had a broad perspective of risks and opportunities, so a two-sided risk definition, whereas now you're talking about the downside risk only and talking about opportunities somewhat hidden in terms of a strategy, right? But this is not, I think, what we should look for, because you also require a balanced view, and that I think requires, as also Vincent noted, a balanced reporting on opportunities and risks. Now, looking at risks for a minute, I mean, you don't define risk, right, in the exposure draft. I would encourage you to include a definition because it's a very difficult term often used in different understandings. And you just describe risks which could disrupt the business model, with risks which could disrupt the strategy. I mean, what does it mean to disrupt? Is it only that I have to report on risks threatening the going concern? Or should I report on any other material risks? So this leaves me with some open questions as a preparer, I think. And now, just what could you refer to? I mean, the COSO Enterprise Risk Management Framework provides a broadly accepted definition of risk, what companies use also in establishing their risk management systems. And that is linked to objectives of the firm. Now, your key objective here that you often mention is value creation, right? So what I would suggest is a definition potentially like this, right? Risks are potential future development events that could negatively affect the achievement of corporate objectives. So you always need a reference, right, for the risk reporting, and the objective in that sense probably is the value creation, and you're looking for potential events or future developments that either negatively, that is risk, or positively affect the achievement of your objectives. And so sharing our experience from the German Accounting Standards Board, we had a lot of debates and discussions. And I think this picture probably nicely shows the two-sided definition and looking at a sort of balanced view that you're looking at, right? Yeah, so that is what I would like to comment on in terms of risk. And maybe final point, also don't forget IFRS 7, right? That is never mentioned here in this context either, but I don't go into details here. And thereby back to Thorsten.
Thank you, Peter. Very rich again. I do remember very well the discussions about risks and opportunities, risk being two-sided. I was also part of that working group at the time. Very well taken point. So again, monitoring the chat. I do like to start another poll. This is a second question on these disclosure objectives. This is much easier, much quicker for you to reply. Still, we can, while you're doing this, already start looking into the chat questions. Martin Nienhaus has a very interesting one, I think, although he prefaced it with chat only. I do want to call upon Martin to ask it. It relates to this notion of digging through stale disclosures that are just repetitions from prior years. Martin, would you like to unmute yourself?
Yeah, sure. Thanks, Thorsten. So basically, this is more of a comment. So my observation from the interview study I did with preparers is that they usually, when they prepare this management approach, they take the last year's document. And then they have this and make just some adjustments to what's going on in the last year. And if you now take a look at the large-scale research, it's about 50 or 60% is just repetition of last year. And this is something that is very inefficient for investors to digest. So one idea that I had, and that is also shared by some other people, I think, is that you could be introducing a delta approach in a sort where you have to highlight what changed compared with last year. So basically you have this section on business model, section on strategy or whatever, and then you have this information in the beginning, nothing has changed. You can still provide the stale information following, so investors don't have to search for it. However, this would force the preparer to really state in the beginning of the section what is new, what's going on here. And this is more relevant for some sections, wouldn't be, too relevant for other sections, such as a section that Peter recommended with the future prospects. That might not be necessary. Yes, just
Thank
a comment.
you, Martin.
Not a real question.
Well, you're still, of course, welcome to comment on it.
It's a good comment, actually. If I think we're certainly worthy of a response, if I may. So I think to the narrow question of should there be a focus on reporting deltas, I think that is a really good point. We certainly tried to capture that. And would be really interesting feedback if that's not coming across clearly enough. So that deals with the narrow point. I think on the broader point, some of the corporate behaviours in how they approach preparation of these documents is a symptom of perhaps not always understanding what the document is meant to achieve, and that sometimes then translates into a page frame approach and question of who's in charge of filling the space on this page, and that sort of bigger question is something that we hope the greater clarity that we think these proposals can provide to preparers will also help to address that culture of how the reports are prepared.
Thank you, Matt. You may want to move your mouthpiece closer to your mouth again next time. We had a little bit of an issue hearing you clearly. Next time, maybe. Vincent, you unmuted yourself as well. Would you like to comment too?
Can I just comment as well?
Of course.
Because Peter also mentioned the development progress aspect, and I guess Matt is asking that question. And earlier on, we were having the same concern, had that disappeared. But as I understood, it's being embedded within the topic areas. So at least that was my reading. So within each of the 6 content areas, there's a focus on progress. And as understood, the objective is, for example, in business model reporting, is not to get a static view of the business model, but to have a dynamic view, including its resilience and sustainability. So at least my reading was that the guidance does capture that dynamic aspect.
And maybe if I could quickly add to that, Vincent, you're exactly right, and that's exactly the idea. So we were very deliberate in including this progress element in each disclosure objective for each area of content. And also just a very quick observation. So the point that Martin has made, it was also discussed in detail by the Management Commentary Consultative Group, and there were questions about, well, what to do about standing information, and should management commentary only focus on what changed and maybe have standing data about the company somewhere else separately, or should management commentary be sort of a single stop for everything? And I think the consensus of Management Commentary Consultative Group was that it's important to include all relevant information in that one document. Yes, it is important to focus on the changes, but do not exclude the standing data. And again, so this is out for comment, and we would be very curious to see whether, we got the balance right, and whether our intention to capture progress is even clear in the requirements.
Thank you, Julia. There is one more question by Begonia, and I will leave it up to you guys to decide whether this belongs into a later section. But please, Begonia, why don't you ask it right now?
Well, thank you, Thorsten, but if we are going to talk about it later, I can wait. No problem.
Again, I would leave it up to the IASB colleagues to decide that. Why don't you ask it now, and we'll decide when to answer it.
Okay. Well, thank you very much for giving me a chance to make the question now, and thank you for the presentations to all of you. It's been very interesting. I must confess I haven't read the proposal yet because, well, I haven't had the time, but the Stakeholder Reporting Committee plans to react, as Peter said, so I'll do it later in detail. But I'm not sure if these, the intangibles that are not recognized in the balance sheet are included in this idea of resources and relationship, or in some other part, the value business, or where they are. Because in the EFRAG task force where I was working on, we recommended the European Commission to include them in the sustainability report because they were not in the other part. But is that the part of the content of the new management commentary? So this is my question. Thank you.
Yes, and I think it's actually the right place to ask this question as well while we are at on content areas. And the simple answer is yes. So intangibles, including those that are not recognized in the financial statements and not discussed, they are part of this resources and relationships section, which is quite broad. So this section is not only about the stuff that is recognized in the financial statements, and it's actually explicitly stated in the exposure draft. And maybe just a little bit broader comment. I think it was Peter who talked earlier about non-financial information, and that it's sort of missing or not explicit enough in the document. So again, the idea is that there is only one area of content which is specific to what's provided in financial statements, and specific sort of to providing further explanations to financial statements. So that's financial performance and position. But all the other areas of content, they are all essentially non-financial information about business model is not a financial information. So this is where we are capturing it all, including intangible assets that are not recognized in the financial statements. And also very briefly, I think again, Peter made a comment earlier about metrics. So again, metrics are captured in our proposed guidance, in particular, when companies will be talking about progress in each area of content, they would be expected to provide relevant metrics, and those metrics would typically be those metrics that management uses in monitoring key matters. And again, it's all on the exposure draft. Whether it's prominent enough is a separate question, and we will listen to the feedback and see how to improve the proposals.
Thanks a lot, Julia. So this apparently did fit into this section. Yes, so I think it's a very relevant one that keeps coming up. I have to look a little bit at the time, but there is another question that I would like to have asked here in the forum. Otto Altenburger, please unmute yourself.
Yeah, thank you, Thorsten. I just wanted to point at the new, partly new and upcoming reporting requirements on environmental, social, and governance issues, non-financial information, and there would be opportunity, I think, to take into account these requirements so that you could make a management report which includes the new requirements. This possibility should be open.
If I could give a very brief response to that. So firstly, it's quite likely that many of the metrics specified would also be material in the context of a management commentary, and if that was the case, they would need to be included, because a regulator is specifying them. They may well represent how the business is being monitored and managed, so they would be captured by the proposals. Where they relate to areas that aren't material for a management commentary, as we mentioned earlier, there's still the option to include them, because we recognise that it's helpful to put everything in one place, even though it's not needed to meet the specific requirements of these proposals.
Complicated area, so this probably will develop dynamically and will have to be sorted out.
Thank
Good.
you. Thank you.
Thank you very much. I would like to move on to our next section, although I have a whole list of questions myself that I prepared in case nobody was going to ask anything, but I will have to sit on those until later. So let's move into the issue of selecting and presenting information in the management commentary, including the materiality notion. Jelena, would you like to take over from here?
Yes, thank you. I'll try to do it quite quickly, because we obviously want to hear from you more than to hear us talk, but so let's try to run through the slides quickly. So Julia already explained the core of the model, which is the disclosure objectives, but under it we have a layer of guidance and examples for selecting and presenting information, so that to make life easier for preparers and to help them meet those disclosure objectives. And an important part of this is, of course, materiality and guidance on materiality. And the first point that is very important to make here, that materiality for management commentary is based on the same judgments as for financial statements. That is, management would need to think whether particular information could influence the decisions made by investors and creditors, that is, their assessments of future cash flows or assessments of stewardship. We, of course, recognize that the scope of management commentary is broader, so making materiality judgments may be more complicated. So the board is proposing a number of aspects to help preparers make those materiality judgments. And one of them that Julia and Matt already mentioned a couple of times is this notion of key matters. And those are the matters that we want management commentary to focus on. These are the matters that are fundamental to the company's ability to create value and generate cash flows, including in the long term. And what we've done in the exposure draft is we have examples of what can be a key matter. For example, it can be a feature of a business model that gives you a competitive advantage. So obviously something that investors want to know. We also said that because they are of such fundamental importance, they're likely to be already monitored and managed by management. So management normally knows what is important for the business. And also those matters are likely to be pervasive and relate to more than one area of content. There are also a couple of aspects of guidance that we introduced, which is a guidance on aggregation and uncertain future events, because again, these are the types of information, especially on uncertain future events, that are more important probably for management commentary because of its forward-looking aspect. With that, if we move to the next slide, we can quickly talk about examples of material information. And as Yulia mentioned, they sit under each specific disclosure objectives. And it would be impossible to run through all of them in a session because there are a lot of them. And this is where we drew on many frameworks, on many research documents to just find out what investors' needs are and try to bring them all together. But if you can just look at one example, for example, one specific disclosure objective for resources and relationship is to help investors and creditors understand progress in managing the company's resources and relationships. And it is here that we would ask them to describe the actions that management is taking to develop those resources and relationships and to explain the effects of those actions. And here we mentioned that we would expect metrics, and those metrics would be those used by management. And those examples, it's very important to say that they are not intended to be used as a checklist. So we would expect different companies to look at those examples and see whether they are applicable in the circumstances. And we would also expect them that if something is not captured by examples, but is materials, that would also need to be in management commentary. Next slide, please. And very quickly about metrics. Again, you might have noticed that we don't have a separate area of content for metrics. And this is because we expect metrics to run through management commentary, and material information about any area of content may include metrics. So those would depend on the company's circumstances, and very importantly, they would be derived from information used by management, so they would be entity specific. The exposure draft would include some requirements for metrics, and they are to do with clarity, accuracy, comparability, coherence. So metrics would need to be described and labeled very clearly. So if it relates to only one segment of customers, the scope of the metric would be clear. Next slide, please. And this is again something that is very important in the exposure draft, and many of you may recognize the sort of the 6 boxes on the top, because those are the attributes of useful information that come from the conceptual framework, just like materiality. We've simplified some of the terminology, but underlying principles are the same. What we have added on is this guidance on coherence, which is included as a specific attribute for management commentary. And we expect coherence to work on 2 levels. And first of all, information and management commentary would have to be coherent and connected, linked to financial statements, but it would also have to be coherent within management commentary. So here I'll probably stop and pass on to Vincent for his comments.
Thanks, Helena. So on materiality, I would note that the notion of key matters is a new concept, and stakeholders may face a challenge in distinguishing between key matters and material matters. As I read, I guess my understanding is that key matters are a subset of material matters, but there may need to be further clarity on that particular concept. There's already a struggle with defining materiality, and the same struggle may roll over to key matters. There's also a question as to whether the pervasive concept of materiality, I guess it's defined within the management commentary, but should there be an interaction with the materiality practice statement? So could a link be made there? The various notions of materiality that are applied within narrative reporting. So we've got double materiality, dynamic materiality. When we think about the various corporate reporting frameworks, they've got their own idea of materiality. So I would make the comment that it would be beneficial to have some level of conceptualization that, I guess, ties these various notions together. This would be more along the lines that Peter mentioned for risk, having some conceptualization. I think for materiality, it would also benefit the guidance to have some conceptualization around the notion and how you get to key matters as a concept. Yelena also did mention the examples, and along those lines, I would just note that application guidance is likely to be needed on materiality. The European lab work in assessing the business model and the linkage to risks and opportunities has shown that there's need for application guidance on materiality assessment. So I would support that. On the attributes, agree that the conceptual framework should be the starting point, but the challenge may arise because you do tweak some terms. So some people may question as to why the terms are different from those that are used within the conceptual framework. That is where there are differences. Helena just mentioned coherence really being more a notion of linkage. And maybe this is from previous discussion whereby the notion of coherence perhaps was broader, and it seemed to be quite similar to the notion of completeness, but perhaps that's fallen away. So if it's purely a question of linkage, then I guess it's a distinct concept. But if there's a broader notion, there may be questions around the distinction between coherence and completeness. On metrics, I would say there's need to address and clarify the interaction with the requirements for management performance measures in the financial statements, because those have been addressed within the general presentation and disclosure exposure draft. So there'd be question of what are the interactions between what you have and what's being thought of in respect of MPM, so management performance measures. I guess there's also the question of securities, regulations, guidance, so the ESMA's guidance for alternative performance measures. It should be made clear whether what you're proposing is fully aligned with the securities regulators' guidance, or whether it's unique or what's incremental. I think that would be helpful for stakeholders ultimately. Thank you. Peter, over to you.
Yeah, thanks. And next slide, please. Yeah, well, when I had a look at the attributes, I was a little bit struggling first because I expected reporting principles. And well, I know when looking at the conceptual framework, you're looking at the qualitative characteristics of financial reporting, and that we probably derived these attributes from there. But still comparing this practice statement with other guidance standards in narrative reporting, we are rather talking here about reporting principles, which are, well, more or less the same or similar in a sense at a first glance. But then looking at it in more detail, we find slight differences. And I wonder whether it would be good to explain what, well, these attributes are. Are they reporting principles? And then I would also call them reporting principles. that lead to useful information when applied correctly, of course. Looking at these attributes, I also felt a little bit lost about the relationship of materiality with the principles, with the attributes that you just mentioned. Then later on, I found in the table, in the basis of conclusions, that, of course, materiality is also an attribute, but it's not shown in that overview here. And you could also argue that materiality is a constraint of completeness. So how does materiality relate to completeness, right? That is probably something you could also elaborate on to make that clear. From my perspective, materiality is a constraint, right, of completeness. Then, as I already mentioned earlier on, the management's view was one of the principles that you had in the 2010 version of the practice statement. And I think it's a very important characteristic also, and very important attribute of useful information, and I miss it here. I mean, it is implicitly referred to in various parts, as you already mentioned in the exposure draft, but why not listing it as an attribute, or rather a reporting principle that companies have to apply then preparing management commentary. Then, similar maybe to what Vincent just commented on, coherence. Coherence is a new principle, a new characteristic, and you define it as a sort of, combination of completeness, clarity, and comparability, right? That is what you find in the practice statement 13.27. And I was wondering, is it a little bit of everything, or is it something original, something distinct? If it's something of, the three other concepts, it's probably redundant. Or put it in other words, I mean, what is the difference between coherence and connectivity that the IRRC has as a unique reporting principle? And I was a little bit wondering whether you meant connectivity, but wanted to use a different word for it, which, but at the end of the day, makes it rather confusing, right, to apply. So you say you want to promote a more interconnective narrative that is sort of connectivity then, or you could also argue, if I prepare complete, comparable and concise management commentary, that implies that it is coherent, right? So it's then nothing new. And maybe a further issue, that is proportionality of information. That is a principle that we introduced in the German accounting standards, because we felt that there are large companies and small companies, and of course there are diversified and more focused companies, and the extent, the detail on which you report rather should also depend, of course, on the needs of the users of the financial statements, but should also be balanced with the capabilities and with the specific situation of the preparer, and therefore say you could expect more detailed information for larger companies, for example. And please note, this is not the same as materiality, right? If an issue is material, you have to report on it. But the question is how detailed you have to report. That would rather refer to the proportionality of information. Materiality, similar to what Vincent just mentioned, I think there is need for clarification also in terms of the perspective. We're now talking about the outside in, inside out perspective. Both is implicitly addressed somehow, but I think you could be more clear in this respect. Also with terminology, you're talking about material, a key, fundamental, and So be careful with using the words and being consistent here. Next slide, please. Two more short issues. That is with metrics. I think it's very well done. Very comprehensive requirements. I felt maybe a little bit too comprehensive in a sense that you have to well define, reconciliate, and compare, provide comparative information for all metrics. Question mark, or is it just for those metrics that are well are not linked to the financial statements? So I wasn't quite sure that this is rather not being too demanding. And final point, which we haven't talked about, that is the issue of cross-references. And I think this is a very important topic. You mentioned by cross-referencing, the information becomes part of the management commentary, right? And apparently, I mean, you also talk about signposting complementary information. And I'm not quite sure that this means that then this information is not a part of the management commentary. And if so, you probably have to distinguish two different types of referencing, right? And an important point in terms of assurance. Now, if you cross-reference, and if you say this becomes part of the management commentary, well, that means it would have to be audited. It would have been subject to assurance, unless, and that happens in Germany nowadays, the audit profession, well, excludes that from an audit. Right, so we have a specific auditing standard for management reporting here in Germany, and that has been developed by the audit profession, offering the opportunity to exclude these pieces of information that are cross-referenced. And so I'm not quite sure that this is something you're well looking for, but still I would encourage you to also consult and check with the audit profession here in this respect. Thank you.
Yes, thank you very much, Peter. A lot of food for thought again. Maybe this is a good time to start the poll on materiality and also give the opportunity to Julia to follow up on one of these key distinctions that seem to be making problems, namely that on materiality versus key matters and related notions. So let me start the poll and ask Julia to unmute herself, maybe while people are responding.
Voting. Thank you very much, Thorsten. Actually, a couple of comments on the very useful input from Vincent and Pete. Really interesting to hear your perspectives. So I suppose a couple of comments on the key themes that you've highlighted. So first of all, on materiality and key matters, just to be very clear. So according to the conceptual framework, materiality is an attribute of information. So information can be material to investors and creditors or not material. A matter is not Materiality is not an attribute of a matter. So a matter cannot be material. Information about matter can be material. And this is what explains our choice of terminology. So when we're talking about those important matters, you know, key risk, key competitive advantage of the company, a key intangible that, for example, has a lot of value to the company. So these items are matters, and we're talking about key matters. So the company first need to figure out, you know, what are those key matters that are important to talk about in management commentary, and then it needs to decide, okay, what information about those key matters is material. And if this is of interest, we actually had a separate paper for the board in February this year explaining the differences between key matters, materiality, and the notion of being fundamental. And I suppose the overall idea is that this notion of key matters is one tool to help companies identify material information. So if a matter is key, if this is something that keeps management awake at night, chances are some information about this matter will be material, and the company better provide this information in management commentary. On the other hand, there can be some information that is material, even if it does not relate to a particular key matter. So what it is, it's a tool, because obviously in the management commentary, it's more difficult to figure out what information to provide compared to IFRS financial statements when we have a lot of requirements and guidance. So that's one point of distinction. But I think what I'm taking away from this discussion, the distinction we were looking to make in the exposure draft does not come across clearly enough. So we can do more in this area. And then a couple of other very quick thoughts. I appreciate that we don't have a lot of time left, but I suppose I just wanted to reiterate sort of the key idea about the attributes which are discussed in the exposure draft. So essentially those attributes, they build on qualitative characteristics of useful information in the conceptual framework. So essentially attributes is another word that we use in this document. And the reason we use a different word here is because we were looking for terminology that would be clearer to the audience of the revised practice statement. And we acknowledge that people who are responsible for preparing management commentaries are not necessarily the same people who are responsible for preparing financial statements. So they may not be familiar with conceptual framework. So what we try to do is to take exactly the same concepts, but express them in a less technical way. Again, whether it was a good idea or not, it remains to be seen in this consultation. And generally, terminology is a little bit of a sort of a challenge in this area, which then brings me to the point of coherence. So I think it's fair to say that the notion of coherence is very similar, if not identical, to the notion of connectivity, notion of linkage. But again, there are already many terms in the market. So what is the clearest way to express what we're talking about here? And Peter very rightly pointed out that there is a linkage, well, for the lack of better word. So there is a relation between the notion of coherence, connectivity, linkage with the notions of completeness, clarity and comparability, because, you know, going back to key matters are likely to be very pervasive. If I have a key risk to my competitive advantage, well, I need to tell something about it, both in discussing my business model and in discussing my risks. So by being coherent, you know, we help companies to be complete. Again, probably we can do a better job of explaining it. And very last, very quick point on cross-reference, because I think it is actually quite important. So the thinking in the exposure draft is that if information is included by cross-reference, it actually forms a part of management commentary, and it must possess all those same attributes of useful information. And this is, of course, different from signposting, because signposting is sort of additional nice to have information, but it's not necessarily material for inclusion in management commentary itself. But just to conclude, a lot of useful comments for us already here, and definitely a lot of useful food for thought for us going forward.
I think so too. Very good. Thank you very much. I don't have a specific question on this section, so I'm really happy to go over to the...
That you would have two different types of references then, right? Signposting is a different type of reference than cross-referencing. So you would have to well, define some requirements for distinction.
Agreed, yeah.
Good, thank you. So let's move on to the final section, which I suspect interests participants very much. This is on reporting on sustainability matters in the management commentary. And there's already a question in the poll that I would really very much like to get to at the end. So let's maybe, in the interest of time, keep everybody's prepared remarks a bit on the shorter side. Starting with Matt, please.
Yeah, thank you, Thorsten. Yes, conscious that these are all topics that we could devote an entire presentation to. So my apologies for not being able to do them justice in 2 or 3 minutes, which I will try and keep to given the timings. So I think the obvious question for a lot of people is, you know, why are there not sections on long-term prospects, intangibles and ESG matters in the exposure draft? And the answer, or our thinking for why there shouldn't be is because they are just pervasive. They are going to hit every area of the management commentary typically. So what we've sought to do is make sure that the detailed requirements and guidance highlight those aspects where it's appropriate to do so. But then we've also recognized that these are things that people are expecting to see in the exposure draft, and therefore we've put an appendix together at the back, and do please take a look at that as a substitute for a longer discussion. We put an appendix in there both to illustrate how they are covered, but also to make sure that preparers are thinking about those matters and to sort of get that shift in mindset that is required when people approach management commentaries. So let's just jump to the next slide on long-term prospects. And I think we've had a lot of talk about materiality, but I just want to focus on that again. We know that this is a really difficult area for preparers to apply materiality to. And so what the board has done is seek to provide as much guidance as it can on what it means for information to be material. So to the earlier comment, explaining what assessments investors and creditors need to be able to make with this information, tying it into their assessment of future cash flows, and specifically to relate materiality judgments to uncertain future events and how you would deal with it there, because very often you get the question, well, anything could happen in a not long enough time horizon, so surely you would need to cover everything in a management commentary. And of course, if you look at the world through the eyes of a discounted cash flow model, that's not true. So we're trying to get that much clearer focus with our guidance. You will have seen from earlier examples that the objectives for the content areas in management commentary are also written acknowledging the importance of long-term prospects, because they can be a very big chunk of enterprise valuations. So let's jump on to the next slide, intangibles. I just reiterate the answer to an earlier question here, that we're talking here with resources and relationships about any resource or relationship about which information would be needed to understand the entity's prospects. So whether that is recognized in the financial statements, partially recognized in the financial statements, or doesn't touch the financial statements at all. And of course, many resources and relationships are intangible. So I won't dwell on that any further in the interest of time, and let's go to the ESG bit, because I know there's some questions on that already. So just to reiterate what we said earlier, environmental and social matters are covered by requirements and guidance throughout the practice statement, even though there isn't a specific section on them. Information needs to be provided both on the effects of those matters on the entity, but also the entity's impacts on environmental and social matters, where those impacts could in turn affect the entity's future prospects. So for example, certain business activities may be damaging to the environment. That may mean those activities are not going to be sustainable in the context of either public pressure or regulation. They would need to be reported on in a management commentary. Also, just picking up on the point that I think both Vincent and Peter made earlier about governance, there's a specific design decision there that management commentary is not trying to replace governance reporting. Key reason for that is different jurisdictions have different governance environments, and therefore it would be very difficult to write a global set of requirements on that. And also a practical issue is that very often governance reporting is owned by a different body to the body that owns the management commentary in each country, so that might create implementation issues. So as I've said earlier, the management commentary is designed and was designed from the outset with the notion that entities might be using sustainability frameworks or other specialist frameworks to identify and measure matters that might need to be addressed in the management commentary, and therefore we sort of the practice statement was designed to support the use of those other frameworks where information is material in a management commentary, but it does of course provide guidance and requirements for presenting that information. Specifically, of course, and I know someone's raised this question already, how does that relate to the work of a possible future International Sustainability Standards Board? Well, of course, we'd hope that the information defined by an IASB, which is likely to be designed to meet enterprise value assessments for reporting, would fit naturally into a management commentary. In that sense, the management commentary provides the home for this type of information. And also, one might expect that a future IASB would consider how the information it was specifying would need to be specified in order to meet the requirements of a management commentary. So I think I should leave it there to give the other speakers a chance before the
I'll be
event
quite
closes.
Fast. Just in the interest of time, I'll just make comments on the examples. So overall, the examples are helpful. I would note that the examples cannot be exhaustive. I would suggest that you should aim to illustrate all categories of intangibles and sustainability related factors. So for example, should not be biased towards climate, ensure there are sufficient social and governance examples. I recommend scenario analysis, as that can demonstrate the link between strategy, risks and opportunities in the assessment of resilience. And the work that the European lab, the very first project we did was also had some examples around scenario analysis. The next slide, and that will be my final area of comments. So an analysis was done by the PTF and FRS. I guess Bayona commented. And there was a gap analysis that was done between the NFRD and the management commentary. And if you just look at the very first section and the analysis that, or rather the conclusions that were made, was that the inside-out perspective is not covered by the management commentary. But Matt, what you've just said is that it should be covered when it's financially material. So I guess you've got some work to do to demonstrate that. And that also goes with some of the other aspects. So for example, there was an analysis around the outcome of policies and the description of policies as well. So there was a view that that's not being addressed, but that could be a facet of governance whereby it's implicit within the requirements. That's why I really emphasize the importance of having governance related examples. Overall, I'll just say I appreciate that the management commentary is a high level framework which is meant to complement other standards. You've talked about the IASB, but there's also at a European level, there'll be standards as well. But this management commentary can have a complementary role as other high level frameworks. Okay, Peter, over to you.
Yeah, next slide, please. Well, I'll keep it brief as well. So overall, I think the management commentary is the appropriate location for ESG information, without doubt. So we already have experience with that in the EU, and that will even be more important in the future. I think that your appendix provides a good summary of the requirements and thereby an enhanced emphasis. Because, as you say, your approach was rather to, well, integrate that throughout the guidance, throughout the entire document. And indeed, as I already mentioned, it somehow gets or may get lost, at least if you look at the headlines, right? At the content areas, there's nothing with ESG. And so that is, I think, then an important way to put more emphasis on this if you want to report on that important area. I also share the view that it is good that you are flexible and open to other frameworks so that they can be combined here. And of course, we'll have to see what the role of the IASB standards or the ISSB standards will be in relation to the European standards, right? And whether, well, companies at the end of the day have a choice which ones to refer to, or whether there is conversions between the two. So that is obviously something we cannot report on right now. But therefore, I think still it's important to be open here for developing not contradictory requirements for preparers. I think this is important from a European perspective. As regards the intangibles, well, intellectual capital reporting has also been a topic in research for years. And we always complain that companies report so little on intangibles, that they need more guidance in this respect. And to be honest, I'm not quite sure that this is enough guidance that is provided here. Of course, it's part of the resources. You have tangible and intangible resources, but it's still rather vague and maybe up to the companies to look at additional frameworks. For example, the IIRC integrated reporting framework, where you find the 6 capitals. So this is probably offering some concept here, which I still think would be valuable to provide some additional guidance. Thank you.
Thank you very much, Peter. So we're almost at the end of this workshop. We've also exhausted our time frame. Let me still fire off the last poll to get some more data from you about this notion of ESG and intangibles, and the extent to which you think that the management commentary will do a good job of capturing those important aspects. Looking into the chat, I don't see any new questions coming up, and that might be as well. In our little running sheet for today, we have a final section on concluding remarks. So as a host, maybe I can take the privilege of having a few final comments. Of course, the relationship between IFRS, including management commentary, and IASB standards is a key question. Everybody's holding their breath to see how this will turn out. Maybe if you could take back to the foundation again, this remark that keeps coming up. The IASB seems to refuse, sticking to reporting. Sustainability standards is, to me, a very unfortunate term if really the mandate is about sustainability reporting standards. But for some reason they keep sticking to that much broader notion, which I think is a bit unfortunate. But that's a side comment. I was very interested in Peter's comment. That's another point where he said that value creation and generating future cash flows is really the same thing if you're talking about financial materiality and financial value. And maybe a question to you could be, is the fact that in the management commentary we have both of these terms side by side. Does that signal that value in the management commentary means something other than financial value, something maybe broader, something like social or environmental value even, or through a back door, or is it really a linguistic redundancy here? So that's something I would be interested in. And finally, maybe then I'll keep quiet. The notion of insurance seems to be a key aspect in making all of these requirements binding and really effective in practice. Some academics, in the context of the consultation paper on sustainability reporting by the trustees last year in our workshop, some of these academics have commented, in the sense of, should we forego certain information just because the audit profession is unable or unwilling to develop approaches to providing assurance on it? So of course, looking to the audit profession and talking to them about auditability and assurance, that's a good idea. But ultimately, if they say this is going to be hard to do, does that mean we're not going to require the information? Right. I'll leave it at that. People are, of course, free to leave if they have other commitments. If you would like to comment, feel free to do so. Otherwise, we can also call it a day. I think it was a very interesting workshop. Thanks for all of your participations, for all of your insights, and also to the audience for their active participation, including in the polls as well. Good. Then I wish everybody a good weekend.
Thank you very much, everyone.
Thank you.
And thanks again.